All right, Scott's back. We got him from Sow and Reap Capital. My name's Andy. I'm from Finding Value Finance. The vacation's over, Scott.
It is
I know.
over, but I'm going on another vacation next week, actually.
Are you? Is
Yeah,
that is this the vacation to recover from the vacation that you just came from?
yeah, pretty much.
So, get some people asking. One, they like they like hearing from you. They missed you. I'll just say that.
Thank you.
And one thing that the question at least I have is when moon for uranium. So I'll give you my opinion first. I don't want to put the pressure on Scott. I don't know if he's been looking at the markets, he's been on vacation and whatnot. But my opinions are, I say that we're going to moon soon. So that'd be moon soon, right? Uh, I think
Yes.
I think oil has broken out of its downtrend. It's already completed what I consider to be kind of that first wave move. We had the Strategic Petroleum Reserve releases tampering that down, coming on back. Actually, I'll show you guys what that looks like. And I think I think you called it right with the uranium kind of moving with the second stage of oil.
Mhm.
So we've our second wave, I should say. So this is the first wave here. We've got that nice pullback, the Strategic Petroleum Reserve manipulation release, whatever you want to call that thing. We're still above that strong support level at 75. We're heading on higher here in the short term. We're kind of drifting a little bit higher. I think we're putting in nice little pattern there. And when crude oil goes after they stop releasing the Strategic Petroleum Reserve releases, I think uranium's going to go. And you can see that. And I know I've got Scott on here, and I'm the one doing all the presentations, but I think we're getting close. We're above support. Everything looks good to me. And I'm not as worried about the timing. I know everybody, they talk about the timing so much. They want it to be, so precise. I just look at it like, hey, it's above trend. It looks good. Let it roll. What about you, Scott? What's your opinions on uranium right now, or does it even matter? I mean, you came back from vacation. You probably weren't even looking at the accounts. You know what?
Yeah.
What do you
So
think?
so yeah, I haven't been looking at anything over the last to be honest. So maybe I check the prices of some things maybe every second day or whatever. And I bought some things that were down, and that was pretty much it. So it basically goes to show nothing's changed, I don't think, fundamentally since I come back. So it goes to show that you don't really need to be looking at the markets every day and looking at the price movements every day. So I think that's really a key lesson. I'm probably going to spend a lot less time looking at the price movements going forward, just because I think it's just there's just so many more things in life that you can enjoy outside the markets, and I think you need to enjoy life right now. So that's one of my key lessons when I was away. But I mean, looking at the markets, I think I stick to the point that the uranium stocks usually follow the second leg up. So what I mean by that, I'll just share my screen with you again on this. So if you look at the XOM chart, and so this is ExxonMobil at the top, and this is Chemical Corporation down at the bottom. And obviously, Chemical Corporation did go, have a bit of downward movement because of their dilution. But let's just look at what happened, and what Andy's referring to right now is this. So XOM had a massive run, up to here, and then basically Chemico's the biggest run, the parabolic move came effectively after, and we could be sitting around here, right? So because XOM, if you look at the XOM chart right now, it's going parabolic again. So this was a
Yep.
short pullback due to the SPR release. The investors in XOM basically said, no, we don't believe in you. We don't believe in the downward movement in price in oil, because they knew it was artificial. So the smart investors, I think, just kept piling into XOM and other oil stocks like Occidental, and there are heaps of other ones that Andy follows. They've all stayed really strong, right? All the oil companies, all the natural gas companies have stayed really strong, which means I think the smart investors didn't really believe in the story that the oil prices were coming down due to demand destruction. They were like, no, that's not happening. It's really the SPR release putting a temporary downward pressure on the prices. So none of the oil investors believed in it. And I think we are on the verge. I think there were talks, is that right? There were talks about talks of Biden potentially releasing additional oil, doing an additional SPR release.
They can try
I
to
don't know how
stop it. They can delay it, but they can't stop this move.
That's right.
It's
That's right.
That's all they can do.
delay it, but it's gonna lead to a more explosive move
Yes.
down the road.
Yep.
That's all I think.
Is XOM actually putting in an all-time high?
It is. It is.
Oh,
Strongest
look at that.
Strongest monthly close ever. So what I see on the XOM chart is here. This is what I see.
This is game over, guys. So this is
big.
We saw a large move across the sector today with crude oil being down.
Yeah.
These are people positioning for a big move in oil, I think. I think they're front running the price of crude oil.
Warren Buffett's massively betting on oil right now. Like he owns like what I think close to 20% of Occidental right now. Yeah. And he's just increased his stake in ExxonMobil as well. I think he owns like 7% stake in ExxonMobil. I don't know, something like that. So I might be wrong, guys, but I think he owns a large portion of XOM and Occidental. And he is not usually an investor in commodities, right? If Warren Buffett's seeing value in energy sector, I mean, there must be value because he's seeing something that he normally doesn't see. So you've got this is what I see with ExxonMobil, for example. So if you had this huge consolidation period from 2005 to now, 15-year consolidation, and we're just breaking above it. That is huge. That could be huge. And that probably compares to a period here where we did not much. I mean, this was, funnily enough, ExxonMobil didn't move. I don't know what happened here precisely. But
I would extend it all the way out.
Yeah.
Because that's a breakout retest. Yep.
Yes. Usually what happens is if you have a period of long consolidation like this, your next move is going to be explosive. And that's potentially what's coming for the oil sector.
It is what's coming.
I think it's what's coming.
It is.
So yeah. Going back to my other point around uranium and how it coincides with the second leg up in oil companies. So this is where the ExxonMobil probably had its second leg up in the oil boom. So let's go back to the USOL chart, just to put the oil price back on. We might be starting this run, which means this is the first leg up in the oil price back in the 2000s. This is the pullback, probably pullback similar to this, but remember the conditions are much worse right now in terms of the energy crisis. So this pullback can be much more short-lived than back in the 2000s. And this is the second leg up in oil prices. And this is what happened to uranium during the second leg up. And if you look at the relative performance of hold on, I haven't been using TradingView for a while. Hold on. So if I just go DCJ divided by XOM during this period, and I'll just put it on a new pane. Oops. This is uranium stocks relative performance versus XOM, the biggest uranium stock versus one of the biggest oil stocks, and the relative outperformance during this period was, let's go somewhere from here to here, was 100%.
Can you put another chart on there just for the heck of it?
Yes.
Try URA versus OIH. So that's energy service and uranium. I'm just curious to see how those also if they were like even or what that chart looks like.
Yeah, so yeah, unfortunately URA doesn't
data back there.
Yeah. URA only really started.
What about CCJ versus OIH? I don't know if OIH goes back that far, but
probably
instead of
not.
URA.
Let me just pull up OIH. Oh yeah, it does. It does. Okay, so CCJ divided by OIH.
Yeah.
Look at that. Okay,
it's up top?
Right now it looks like OIH is going to massively outperform CCJ, but that's what it looks like. But so this was the time period that we're looking at, like 2004 to 2007. Yep. So yeah, back then CCJ still outperformed OIH, but I think the environment that we're in right now is very different. in that we didn't have an oil crisis back then, right? And we do right now because of the Russia-Ukraine conflict, because of reduced, I guess, production capacity of oil producers. But it's the same story with uranium. So I think all energy is going to take off. And I think this is really the time where things will start going parabolic, when the oil prices really start their second leg up. And the only chart that
And
I did look at when I came back.
and
Yes.
when we talk about this, it doesn't mean that it's like a week from now. What we're saying is when you take big
Yeah.
long-term, big picture views, that it could happen at any time within the next year or something like that. As longer term investors, it just, we take bigger time frames, bigger long-term looks, and then we say it's somewhere in this general vicinity, it's about to happen.
Yes.
But that can mean it still takes a couple of months. We could get a false breakdown, everybody gets scared, they all sell their shares to Finding Value and Scott, and then it takes off. it's just the way it is.
That's right. That's right. Because when we're looking at the money flow from, general equity, so this is Chemical Corporation divided by Dow Jones Industrial Average. Obviously, Dow Jones did really well. I was very surprised. I was just looking through some charts today, and it looks like DJI, actually, Dow Jones Industrial Average has, look at that. Did you see this candlestick? This is a monthly time frame.
Yep, it's done very well. I think we're going to go
skyrocketed.
up and do a double. This is going to be what I consider to be a bull trap.
Yeah.
And we're going to go up, and then it's going to roll back over at some point. That's my take.
Yeah.
I could be wrong. I'm not betting anything on it. But
But even despite that, even despite the CCJ sell-off due to the dilution and also DJI rocketing like that, I mean, this pattern is very much intact, right? So if you zoom out like this, it's still a rounding bottom. And obviously there's going to be a time when we do go parabolic.
Yeah.
But yes, as Andy said, we don't know exactly when. This is a monthly time frame. So if we look at, even if I just do this, right? So let me just draw in a arc. And let's do something like this. Like, I mean, it can be in just, I mean, the timing of this is really uncertain because you don't really know when it's going to break out of the arc pattern, right? Because we could be looking into 2023, 2024 until it kind of comes up here and then it finally breaks out. So in terms of timing, it's very hard to tell. It's almost impossible to tell when the exact timing is going to be, but I mean, we're in a clear uptrend on a monthly time frame. And for me, that's what matters. And every time it comes down to these type of levels, that's when I will go in and buy, right?
Me too. Yep. It is, yeah. So we're close. We're close to the edge, hopefully, over the next year or two, where things really heat up. I like a lot of companies. They look good. And that's where my head's at. Now, I've got another thing for you, another question. It's not uranium related. All right. And, we're drawing down inventories of precious metals dramatically. It's like, boom, 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 boom. We're just knocking these inventories down. What is your opinion when we get to these inventory levels that get really low or non-existent? What do you think is going to happen when that occurs?
It's going to skyrocket.
So do you think the paper price is going to skyrocket with it, or do you think it's going to be like the premiums just go ballistic? Because we're seeing premiums over here go ballistic on American Eagles, on some of these other products, Maple Leafs, stuff like that.
I think paper prices will go ballistic too.
You think so?
Because I don't think there's ever been a case where the disparity between the paper price and the actual underlying commodity price stayed for forever. Because eventually they will have to close down. Because the reason for that is because basically, if you are short silver and you go in the futures market to buy and you call for delivery of the silver or the gold or the platinum, I mean, eventually the sellers will need to deliver those things. So by suppressing the prices, unless there's like force majeure, unless there's like, some weird thing that happens that hasn't really happened before, the price between the actual physical itself and the actual underlying the paper price will need to close. The gap between those two prices will need to close. And that's what we saw in other commodities too. Like, I mean, flipping it the other way, the most recent memory from my perspective is really the oil prices, right? because the physical demand wasn't there, the oil price had to go negative. In the same way, I think if the physical demand is there, the paper price of the silver, of the gold, will need to go up to catch up with the physical demand. So I think it will close.
So here's some things I'll counter it. We can go back and forth here.
Okay. Yeah, sure.
All right. So the premiums are going large on the physical stuff that the retail side is buying. So that is a fact that is happening. Is there a possibility where they go to take delivery of the metal and they pay out the people in cash, which is an option? They can pay them out in cash, and then all of a sudden you see the premiums go ballistic and the paper price converge to zero because people have lost trust in the system or the COMEX. They said they just dump the paper contracts like mad and go after the physical silver. Is that a possibility, or is that just not?
I don't think so, because the buyers can demand for delivery, so they.
But they could pay it out in cash, though. They have that option. I
think. Well, theoretically.
Yep.
Sorry, Mike. Hold on. I just need to go get the door. Hold on. Sorry.
Now go.
So basically on the futures market, my understanding is that they can stand for delivery. The buyers can stand for delivery, and it will be breach of futures contract if they don't deliver. So unless there's like a force majeure or something like that, where they can say, oh, they couldn't deliver because of certain events, they do need to deliver. The sellers will need to deliver eventually. And if there was a large organization, I think, that wanted to take advantage of the disparity between the prices, and suddenly it could be China, for example, I think, that can go into the COMEX market, buy a bunch of contracts and go, actually deliver it right now. We want the gold, we want the silver. That could really break the market. So I think eventually the gap will close. From what I've seen back in the 2000s anyway, there was a huge disparity at some point within 2000 when I think there was a time when silver went from $18 to $8 or something like that, very briefly. That's probably when I told my dad to buy, when it was getting smashed. But I remember back then very clearly there was a huge premium on silver too. Physical over paper, and that gap had to close very quickly. And I mean, it's not being closed right now as quickly, but I think eventually when the inventories are down and there's big money that's calling for delivery of these physical metals, then I think the gap will close.
Now, someone made this comment. I agree with the comment because I've noticed it too. We've had gold go down for like 7 months in a row, which has never happened before. And it correlates just with the war that happened over in Russia. You know, it's been like down. Do you think this is like a manipulation type move where people they're scared or they're trying to protect the dollar? And do you think like a country could come in here and just say, we're going to absolutely smoke them at the right time when the inventories get down to a level that it's just bare, and then they just go, boom, give me delivery? You think they're going to do something like that, like China or Russia or somebody?
They could. I mean, that's always a scenario that I had on the back of my mind. I'm not betting on it or anything like that, but I think that's a possible scenario. I think some sovereign fund might come in and go, actually, well, if you guys are suppressing the price of gold and silver, and really the main reason for the suppression is the US dollar will be a threat under threat if the gold prices were to skyrocket, because obviously for a sovereign fund, it's an alternative to the US dollar, right? Because it's a reserve, it could be a form of reserve currency or reserve asset. So I think that could happen. I think I'm not betting on it once again, but I think that's something. It's definitely a valid outcome.
Yeah, and what else are you seeing? If you've looked at the markets at least, what else are you seeing out there that maybe gets you interested or gets you excited? Is there anything else outside of perhaps silver or or uranium.
I think
Yeah.
natural gas is starting to look really attractive
Yes.
because I think I did post up. I mean, I did share the chart with you. I think we drew the chart in like using the Apple chart pattern ages ago, and I might try and pull it up very quickly if I can find it.
Oh, I love the natural gas. Don't get me wrong. It's it's the one of the most volatile commodities. It is an absolute. I'll say this: it's a portfolio killer if you don't know what you're doing. If you know what you're doing,
Yeah,
it's a wealth builder creator in the shortest period of time that just blows the portfolio up in a positive way if you know what you're doing.
yeah,
So
yeah.
that natural gas is the best and worst commodity depending on who's playing it. I love it. So that's me. It's my favorite commodity of any commodity because of its volatility.
Yeah, yeah. I can't find the post, but basically we had the Apple pattern here. It looked very similar to the pattern that I drew in quite a long time ago as well. Oh, oh, I lost it now. I've lost it.
I saw you
But
had
yeah,
the
basically it's
two
the
potential
Liverpore's
plays there.
bullish cylinder. Yeah,
Yep.
yeah. It's that pattern, and I also drew it in the other. But anyway, so basically, yeah, these were the two potential, I think, pathways. And I think when I was going through some charts with you before, Andy, we saw an Apple pattern that looked super similar to the natural gas pattern. And so if I just go back to the Apple chart,
Netflix has the same pattern too, if you want to know.
Netflix, yeah, I think Netflix might. Well, are you saying it's a buy right now?
No, no, no,
Netflix?
no. Netflix during its bull market run from
Oh yes,
2012 to 2021 had the same. It's got the same type of fractal as a lot of
yeah,
these oil companies are doing.
yes. So this is a pattern that we were seeing before on Apple, which we thought were very similar to natural gas, right? So let's just go bar pattern and draw that in. And then if I just go to natural gas.
We're getting your trading view skills back to.
I know, like my trading view skills, I haven't used it in a while. So this is kind of the pattern that we're seeing. I don't know, it's kind of all messed up.
You got to squish it, which is better because which means if you squish it together, it means your time frame is compressed.
It's shorter
to go. Yep, there it is.
So that's the pattern that you were looking at basically, and it overlays pretty much perfectly to the Apple chart. And this is what happened to the Apple chart. So Apple actually also built up a Liverpore's bullish cylinder during this period, and natural gas has as well. And so for me, like we're in the buy zone right now. Like this whole vicinity here, I think we're in the buy zone. And I know there's been quite a lot of talks about TTF and Dutch gas and UK gas coming down because of the shipping capacity or whatever, and also the storage capacity. But I think they are very short term, just like exactly what happened during COVID, where when we ran out of oil tankers and things like that. Like it's just like a deja vu, isn't it, of that? And so for me, natural gas is starting to look really attractive, and I might try and
Come on, just say it. Say it. You're going to. Did you say? I don't know if I heard that. Did you say you were going to sell some uranium and buy some natural gas? Is that what you said?
No, I'm not selling uranium. I'm going to be deploying fresh capital. But the thing with natural gas companies is they haven't really come down in prices, right?
Well, that's because I think this is all artificial. I think it's brought down by the LNG terminal being down in Freeport. Once that thing comes back up, we're going to get connected. And I know people think, oh, the prices have gone down for TTF natural gas. That's because they have nowhere to store it. The natural gas price over in Europe is going to be ultra volatile. It's going to be up, down, all around. This is the perfect trader's market where you get it down. I would buy it and then just ride it on up. And I don't know. I think the opportunities here are just massive for insane wealth creation. And I've talked a lot about it on the Finding Value website, the community we've got there going on. I've talked a lot about this coming back down to this point, exactly what's happening, and then some of the companies to play this because the leverage here is massive. like I don't know if it's going to go as high as that is. I think it probably could, where you get to 20 to $30, somewhere in that range. It's a possibility in that time frame too, somewhere in that similar time frame. And if that happens, guys, the natural gas companies will make so much money. It's going to be life-changing, life-altering. It's going to be lights out. Now, I'm not trying to just pump everybody up, but if it does that, which we've got the pattern, it looks really good. I've been waiting for this, guys. I've been waiting for this since the last bull market in natural gas specifically, because this thing is going to go ballistic, I think. And you got to keep in mind that they are transitioning all these coal power plants in the United States and Canada, all over the place, all the natural gas. And then they put these wind farms in, which are not producing like they should be. And I just think the demand's going to go straight towards the natural gas, and we're just not going to have it. It's going to be a very tight market.
Everything's looking really good in the energy sector. Like U.UN, like that looks fantastic.
It does.
This is like, it looks so coiled up right now to my eyes anyway. Like you know how there's like this rounding bottom here, but it just looks so ready. I don't know.
If you look on the right hand side and you use the top, the total price top of U.UN in the past year, and you zoom in on it, you've got an inverted head and shoulders that is occurring if you look at it from like a daily perspective. And you can see an inverted head and shoulders with a neckline going across at about $17 is the neckline. Yep, that's it right there. Yep. Correct. And that the pattern brings you up above the all-time high.
Yes.
So
and also what I see here is another thing. You've got the 200-day EMA, and obviously that acts as support and resistance through many charts. So you've seen support here, support here, support here, support here. Broke down. This is a false breakdown in my opinion, and we broke back above, and then we retested, and now we're ready for launch. Is what I'm seeing. So
fingers crossed, guys.
That's what I see.
We're not guaranteeing any of this. This isn't supposed to be used as advice. I don't want to try to give you guys false hopes, but this very well could be the case. And you know what's really good opportunity here is this is the physical metal, or I mean the physical that we're looking at, the Sprott Physical Uranium Trust. The mining companies haven't launched yet. There's a lot that are really low right now. So that is the opportunity.
That's right. And YCA, so Yellow Cake PLC, I mean, we just closed the month yesterday, right? And that's the highest monthly close candle this cycle, well, ever for YCA, so Yellow Cake. So I think everything's looking really strong.
We don't have a rising wedge developing there, do we? On YCA, not that it matters as much because it's not happening in other stocks, but
no, I don't. I think we're seeing like a inverted head and shoulder here as well. You mean like this?
Well, I'm seeing it from the tops there and then the bottoms coming on up like that. Yeah. Yep.
We could. We just don't have enough touch points at the top, I don't think, to call it a rising.
Agreed.
Like only like 1, 2. You need at least 3 touches, I think, to call it a pattern.
I agree.
Yeah. So I don't know. Everything's looking pretty good. Especially the energy sector right now. And my opinion hasn't changed in 2 weeks. Everything's looking super.
Uranium's still your favorite sector?
It is.
Now, I know it says Jesus loves you, but does Jesus love uranium?
I don't know.
It's funny. It's funny. But I did hear, like, if you were to look at a list, natural gas is number 1 on the list, and then uranium second. No, I'm just kidding.
Uranium's still the first for me. Hold on, let me just pull up a uranium to natural gas chart.
Oh, now you're going to use data to fight back on me, huh?
No. Actually, I mean, we've talked about this chart before where we said uranium is relatively better value than natural gas, and we were talking about it when we were right down here. But right now, U.UN, so uranium has outperformed natural gas in terms of the underlying commodities prices. But I
This
like
is
both.
back and
I like
forth.
both.
This is back
Yeah,
and forth.
yeah.
It's
I
literally
was just
back and forth.
hoping it is. I was just really hoping that when we fell to these prices in natural gas, I will see a huge drawdown in natural gas stock prices, but we haven't really seen that.
I wanted it too. Trust me, I wanted it to come on back.
I
I
really wanted it to drop, man.
I did buy some though. I did buy some companies. Some of these highly
Yeah.
leveraged ones, I went for it. I bought some more bass, like a week or two ago when they were down, and or actually it might be longer than that. It might be like 4 weeks now or 5 weeks. Man, time flies. Anyway.
Yeah.
But yeah, I did what I could when I could.
Yeah. Yeah.
But
But
I'm ready
these
for
natural
it.
gas companies are like super strong. Like, I mean, oil companies, natural gas companies, these have been like really, really strong. I mean, Chemical Corporation was really strong until they announced the dilution. But I mean, I think uranium, everything, all the energy related stuff, I think is ready to go. I think they tended to take off at the same time in the last cycle, so I don't see how it's going to be different this time around. I mean, roughly the same within months of each other. So I don't think that's going to change.
Here's a question for you though, and would you, if you were in oil and natural gas stocks, the exploration production companies, would you sell any of those and buy oil service companies, or would you leave it in the production, exploration production? What's your opinion there? And I don't know if you have any horse in this race, so to speak, or maybe you don't have an opinion, which is fine. But I do get some people asking that question. And for me, I still think it's so cheap on the exploration side that I'm reluctant to do that.
Yeah.
So I kind of
I would
stick.
be too. I would be too.
I stick with
the,
it.
the reason why I don't have any oil services companies is because they are still producing negative cash flow, right? So a lot of the companies are still making losses. I know we're betting on them turning around and going up, which in a sense is not too different to uranium. But for me, with uranium, as I said before, with oil services companies, for example, if they're making negative cash flow, they're making a lot of losses per quarter, every quarter that they stay in operation, which means they can go bankrupt really quickly. Whereas with the uranium companies that I own, with the developers, for example, where they're sipping on like $2-3 million cash per year, and maybe 1.5 million American US dollars, it would take a long time for them to go bankrupt. So for me, I'm not willing to go into oil services company as much as I believe in the story. I'm not really interested in the sector because I feel like if you look at oil companies right now, oil producers, they are trading close to like 1 EV, enterprise value, right? So why would I risk additional? Why would I take on a greater risk going into oil services company when I can just buy oil producers that are trading at like 2-3 times earnings ratio, and pretty much nothing when you compare it to their operating cash flow. So that's what I think.
I'm taking the risk. I'll take it. Because I think they look really good, and I think in a price environment of where I think we're going, I think they're going to do crazy things. That's what I think. But I agree with you. I agree with you.
But I wouldn't be selling I wouldn't be selling any of the oil producers to get into oil
because they're so cheap. The risk is so low right now. It's like it's been
the risk is very low.
Yep. I agree.
Yeah.
But I'm going to take the risk myself. I'm in it. I'm in it to win it, guys. You got to swing for the fences sometimes with a little bit of money. You got to do it.
Yes. But uranium is my swing for the fence play, right? So pretty much my entire uranium portfolio is a swing for the fence play. And I've got oil producers, I've got gold producers, I've got physical, precious metals. So that's how I balance my portfolio. Just because I think I understand, I think you need to stay within the circle of what you understand. So for me, like, I think I understand the uranium trade far better than oil services companies trade, for example, right? So I just stay with the uranium companies. I think I understand, the jurisdictions. I understand where it can head. I understand the demand supply story. I understand roughly how much inventory that might be out there. So I think I stay with what I know, and I think that's uranium for me. And that's the swing for the fence play for me.
Mine is Biden's in power. He hates drilling. He doesn't want any drilling. And then if someone else comes along behind him that is pro drilling, game over. It's like game over. Because right now it's, I mean, we're going to drill no matter what around the world. So some of these guys they've
Yeah.
got world operations. It's not just America. So I'm not saying
Yes.
that I'm talking about the entire world. And if I see prices go to where I think they're going to go, which is a lot higher, I think the drilling companies are going to kill it. All these energy service companies, I think they're going to make so much money because everybody wants their services. There's going to be a shortage there. There's going to be even greater demand with supply chains not getting parts and stuff like that. So I think the demand will be very high. That's what I think.
Yeah. Yeah. Could be.
So do you have anything else, Scott? Anything else you'd like to share?
No, no.
No.
I need to, yeah, I need to keep myself up to date with the markets now over the
Yeah.
coming days and weeks. I'm so out of touch right now. I mean, I've been away for 2 weeks and I feel like I'm so out of touch, which is funny.
No,
But
it's fine.
at the same time, I just feel like you don't need to be so focused on the markets. I think once you understand the bigger picture, and once you've selected the companies that you know well, jurisdiction wise, management wise, and the asset wise, which is all important stuff for your commodities investing, right? Because you just need to know the jurisdiction you're in, the management, what assets they own. Once you understand that, and start once you've invested in those, you don't really need to do much more other than wait around for it to play out
Yeah,
for you.
that's all it is.
So
Just gotta wait.
so I could just be away on a holiday for the next year, and I probably wouldn't change a thing that I do. Like I might check the prices every week or once a week or something like that. And if the prices are attractive enough, I might hit buy orders. But other than that, you don't really need to do much else.
So really, you're prepping for retirement here, aren't you?
Hopefully, fingers crossed.
Yeah, yeah. Well, that's all I've got, Scott. I really appreciate you coming on the channel, and thanks for doing that. If you guys want to follow Scott, definitely check out his channel, Sow and Reap Capital. Follow him on Twitter. You can follow myself on Twitter as well. If you guys like these types of discussions, and we'll have him on back whenever he wants. Maybe I'll go on his channel or something like that if he needs to kickstart that thing going. And we'll catch you guys later. So if you've made it to the end, leave a comment below, guys. Say Scott is back. There we go. That's all I got. See you guys. Thank you.
All right, awesome.